Copper leads the way with gains of close to around 8%. JSW Steel also gains after the company's arm JSW Vijayanagar Metallics commissioned a hot strip mill at its integrated steel plant.
HAL surges to a record high after the company bags orders worth 1173 crore rupees from Cochin Shipyard to supply turbines and auxiliaries for Indian Navy's next generation missile vessel projects.
RVNL gains over 3% after it emerges as the lowest bidder for projects worth 340 crore rupees. The company's JV with Salazar Technologies is also the lowest bidder for $7.15 million project from Energy Development Corporation.
Global Spirits rallies 10%. The company commences commercial production of additional capacity at their Jharkhand and West Bengal units. The expansion has been completed with an investment of 142 crore rupees.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Join me as always as Mangala Malu, and we're kickstarting a new series, a new week, as well as a new fiscal in style. The Nifty is flying away, the Nifty Bank is participating, and the breadth of the market is looking absolutely beautiful. Mangala, good start.
Good start. Let's see whether, who gets fooled. Is it the Bulls or is it the Bears? It's all Fool's Day. But no fooling around here. It is a rollicking start indeed. 2,125 stocks in the green for just about 200 stocks in the red. An advanced decline ratio of 10:1 would make a lot of people feel that they're geniuses. But this is also the time when you look back, look at your portfolio once again and define goals for FY25.
Well, that's right, Mangalam. And one factor you need to keep in mind is participation may not be very high because in India, domestically, we are a clearing holiday. So that's one factor. And the second factor that's playing out is, globally, some of those markets are shut as well because of Easter Monday. So select markets will be shut out there. But we'll take a 150-point rally nonetheless. And do we wish you as well for Easter Monday, Nigel? And the celebrations for you and the entire family? Well, thanks a lot, Mangalam. And in a short while from now, there'll be Easter eggs that will be served on the floor. That's exactly the response that I was eliciting and you gave it, Nigel. Thank you for that. But, it is a new day, a new week, a new month, a new series and a new fiscal year as well as we've been pointing out. Let's welcome Sachidanand Uttekar of Trade Bulls for a quick technical check on the market. Sachi, your thoughts, where do we go from here? It's been a very good start. The Nifty's hit the record high along with the Sensex. Do you think it's time for a pause or maybe it's the start of a fresh new momentum move?
Good morning, Nigel. Good morning, Mangalam. Mangalam, I think this move has already been initiated. The way the Nifty surpassed that 22,200 hurdle on previous Thursday, that had already set the momentum clearly on the bullish side. So going forward, 22,500 may act as a minor hurdle, but eventually we see this particular level also getting surpassed. So for this particular series, we are anticipating that we may see the Nifty swinging towards 22,730 kind of a mark. The floor is very well set at around 22,000 as of now, and we don't see any major movement below the same. So probably a pullback towards 22,400, 22,300 would again give a good opportunity to create some long positions. So I think from a momentum and trend perspective, April could be a very clear-cut, trending month. So definitely, one should look at more of buying opportunities. And the trend so far looks confident. So we are optimistic that this particular rally may continue and extend towards 22,730.
Okay, a sense of bullishness in your tone, Sachi. Thanks a lot for joining in. What about individual stocks?
Nigel, I think Nifty PSC stocks are trending well, and both my top picks are from that particular sector itself. Now, if you look at IRCTC, the stock was trending lower on the weekly scale. It did exhibit a kind of a declining wedge formation. Today we have got a confirmation of a breakout, so we are expecting that this particular rally may continue towards 1,010 levels, and that's why we have also recommended participating on the long side in this particular counter to our clients. So one can chase momentum even at this juncture, keep a stop loss somewhere close to around 946 on the lower side. An immediate target towards 990, followed by a target of around 1010. So long positions to be added in IRCTC. And since metals have been trending, higher, and the momentum across this particular sector is very confident, even Coal India should start participating here. If you look at the last 2 months, the stock was consolidating well. The floor is very well set at around 430. The momentum that we have received in today's session may extend towards 466 during this particular week, and that's why we are recommending building long positions here in Coal India. Keep a stop loss at around 438 from a trading perspective.
Interesting move on Coal India as well. The stocks moved to the high point of trade. Sachi, would you have a thought on some of these real estate plays? They're doing extremely well. DLF, for instance, is up 7%. The gains have, accrued after the market opened as against opening up with a big pop. So Godrej Properties, DLF, all these real estate stocks, you have any thoughts here? Do you think this rally can extend?
When we look at the rollover data, clearly Oberoi Realty was one particular stock which displayed very strong long rollovers. Even DLF was showing more of a short covering, a rally. But going forward, I think price-wise, there has not been any distortion, and we expect that this particular rally may continue. Even if you look at the data of DLF right now, the trajectory looks clear till 1020 kind of a zone. And even here, I think momentum could sustain unless the stocks trends above that 900 mark. So I think on a pullback, this particular stock can be considered. Keep a stop loss somewhere close to 910, and we may see an extended rally towards 1020.
All right, take that point. Thank you so much for joining in. Wish you a very happy FY25, Sachidanand. With that, we shift focus to our special segment. We get you ideas of profit coming in from our colleagues at Money Control Pro. Nitin Agarwal joins in with a stock that he's been tracking closely. Nitin.
The company that I have chosen for today is VM Industries, which is an auto component manufacturer supplying majorly to the two-wheeler OEMs. There are a couple of factors that make us a bit about the company. First, which is an important trigger for the company's growth, is the wider adoption of LED products, which are high value, high margin products for the company, and its revenue share is around 51% in the quarter gone by. And with the more products in the pipeline, the revenue share is expected to rise. Further, the company has been aggressively focusing on increasing the capturing the opportunities coming out from the electric vehicle space, and has already been supplying components to major EV manufacturers such as Ola, Okinawa, Ether, etc. Further, in order to widen its product portfolio to cater to the electric vehicle, the company has got into the strategic alliance with Gogoro, which would further boost the company's financial performance. In a recent milestone that the company has just achieved is that the company has forayed into the passenger vehicle segment and supplying LED component, and the company has already received an order from European OEMs. Further, the company has a robust order book, and it has been able to increase its share of business from the existing customer, has been able to capture the new clients as well. In terms of valuation, the company currently trades around 16.2 times FY25 projected earnings, which we believe is very reasonable for a company like this.
Right, with that, we'll step into a short break. On the other side, you don't go anywhere, because we'll have with us the management of High-Tech Pipes. Anish Bansal, who's the CEO, joins in to discuss the company's prospects, the business outlook, the recent capacity expansion that they've undertaken.
Welcome back. You're tuned into Chartbusters. You're on CNBC-TV18. Well, as promised, let's get chatting with the next management. That's High-Tech Pipes. They've achieved their highest ever sales volume in the month of, for the quarter ended FY24 as well as for FY24 as well. Brokerage house Antique, they as well are bullish on the stock. They have a buy rating with an aggressive target price. Well, let's get chatting with Mr. Anish Bansal, the CEO of the company, who joins us on the show. Hi, Anish. Good morning and congratulations on a good showing in your operational performance in FY24. Now, on this base of close to around 400,000 tons, what kind of a sales volume growth can you deliver since your Sanand facility has been commissioned? Point number one. And also the EBITDA per ton, where do you see it scaling to in the coming year? Because there'll be operating leverage that will be playing out as well.
Good morning, Nigel. Thanks so much for the appreciation. With the new facility at Sanand, we have added approximately 1.25 lakhs to 1.5 lakh tons at Sanand facility. And I'm sure that, the company will contribute at least lakh to 1.5 lakh tons extra over FY24. And regarding EBITDA per ton, you can see that, the company's EBITDA per ton is growing, steadily year on year. And I think within this year, our target is around 4 to 4,500 rupees per ton, EBITDA per ton. And with the new SKUs and new verticals, we are very optimistic and excited about the current financial year.
So you said 1.5 lakh, additional contribution. That would mean for the next year, you'll deliver a number of close to around 500 to around 550,000 tons. Is that correct?
Absolutely.
Right.
That's correct.
On the EBITDA per ton itself, I wanted your thoughts on the value-added product mix, because you have a stated target of taking it to 50% plus by FY26. What's the glide path to that? Currently, it's about 31%. So next year, what is it likely to be? And once it hits the 50% mark in FY26, what is your EBITDA per ton likely to be?
So, Mangalam, we are targeting at least, the total share of VAPs this year to reach around 40%. This will happen due to our new products that we have introduced, like solar torque tubes, the color-coated sheets, and there are some special SKUs related to bullet train projects. So, all in all, I think 40% is a conservative number to consider this year, and 50% we are sure for FY26. So
this year, you mean
our blended EBITDA per ton should hover between 4,000 to 5,000 rupees per ton.
So by this year, you mean FY25, right?
Yes, that's correct.
Okay.
Okay. All right. The other parameter where you've done quite a lot of improvement is the working capital days. I recall it being close to around 80 days. As of the last, few quarters, it's come down to, I think, sub 50, around 49 days. Where does this number stabilize at?
So right now we are working between 45 to 50 days, as you said. But going forward, our focus is towards further shrinking of this working capital. And I think 30 to 35 days is an optimistic number that we can consider for next 2 financial years.
And FY26, your peak utilization should be what, 70%?
Yeah, peak utilization is 70%. Absolutely.
So that means that this year you do about 535,000 tons of volumes. The year after that, assuming it's 1 million tons of capacity, you would do close to 7 lakh tons of volumes. Is that correct?
Yeah, that is absolutely correct. 6.5 to 7 lakh tons is our targeted volume for FY26.
And of which 50% will come in from VAP. What's the margin differential between the two?
Approximately 1,000 to 2,000 rupees per ton, depending on product to product and SKU to SKU.
Okay, that's why you're saying that you'll head towards 5,000 rupees in FY26, right?
Absolutely. That's the target.
Got it. How is your balance sheet looking, Anish? If you could help us out. You had issued some warrants which got converted as well to the promoter and the non-promoter group. Your interest per quarter is around 9 to 10 crores. So, how do you see that this number moving?
So, Nigel, if you see, over last 2 to 3 years, we have, while expanding, we have brought down our long-term debt. And I think in coming 1 to 2 years, we will be totally, debt-free company. I'm talking about the long-term debt. And the working capital also, as the number of working capital days is shrinking. So the extra requirement of working capital will also, it will be stagnant where it is right now. So all in all, the financially, the balance sheet will look much improved going forward.
What's the outstanding order that you have right now in terms of volumes and value?
So currently, approximately 250 crores of orders are in hand. This relates to various projects, central government projects, and the orders from our distributors. And I think this is a healthy number, and this is the recurring orders that we get from our customers, our long-term customers. So this is the ideal number.
Got it. Okay, so you have visibility of 4 to 5 months, 4 months approximately, I think so, going by that number.
Yeah, absolutely. The orders are recurring, and the flow of orders is very continuous. So
okay.
We're worried on that.
All right, Anish, you're going to go from around 3.9 lakh tons in the next 2 years to close to around 7 lakh tons. That's a big, big jump. It's more than a 50% jump. Now, I'm looking at the promoter holding. It's come down from around 59% to around 53%. That's because of conversion of warrants. Higher number were issued to non-promoters. Where does this number stabilize at, assuming full conversion? I ask you this is because as the promoter of the company, and you've seen quite a few cycles, now things appear to be on track. What is the holding you'd like to maintain at?
So, there's a still pending conversion, and after this, I think our holding will be around, 57 to 58% in the current financial year.
Right. And would you like to at some point increase it?
Yeah, we are actively looking out forward. There is like capex also ongoing. So we have to balance both the things. So let's see how it goes.
All right. And just finally, you said you have an order book of nearly 4 to 5 months at hand. In the very near future, we have elections, and that usually muddles around with the order cycle, right? So would there be any disruption? What kind of order inflows are you targeting next year?
So, Mangalam, there may be, like a month or so, there may be a little bit, like a normal. But I think after post-elections, I see, a robust spend on the infrastructure side. I think all the schemes like Jal Jeevan Mission or, the railway, airport upgradations, energy, renewable energy, all these sectors are going to, outperform. And pipes, like Sensex, such a versatile product. And I'm sure that the demand is going to come our way, and we are ready with all the capacity, the fresh capacity. So once everything gets in order, so I think we can leverage on that.
Got it. Final question then, before we let you go, is there potential to export as well? I mean, if you could give us a sense on that front, since you'll be having additional capacity, what is it? Where is it headed?
So the new plant that we have set up is in Gujarat, and Gujarat is the ideal destination for exports. And with this new capacity, we would certainly be eyeing towards exports. Once the international prices they stabilize, I think last 1 year we have seen the prices being extremely volatile. But this year, after the normalcy, I think the exports are going to come in does. And the new FTAs that India is signing, like with Australia, with UAE. Right. And UK, EU, and all these things. I think the export opportunity is huge, but it's just a matter of time. I'm just
currently you don't have any exports, is it?
Very minimal.
And what will be the ideal number since you've commissioned this facility in Gujarat and you say that it's got tremendous potential? What should it contribute, say by FY26, as a percentage of your total mix?
Over 10 to 15%.
10 to 15%.
Is it a viable business when it comes to EBITDA per ton or the earnings that you make from exports?
Yes, absolutely. Exports, because the destinations are Europe, Australia, these are all mature markets, where the pricing is, not a big issue because, they are anyways importing from the European countries. So India can be a very big challenger to that.
Got it. Okay. All right. Thanks a lot, Anish, for joining in. Wishing you and your team all the best. You've started the new year in style. With regard to the numbers that you've delivered. Last few sessions, the stock as well has gained. Wish you well. We're going to hold you at all these numbers that you have given us in the last few minutes or so. Well, for the time being, let's slip in a short break. We'll get you more on the markets as well as stock-specific action on the other side. Don't go anywhere. Welcome back. Well, let's address all the top stocks that are moving around. And let's start off with Abhishek, who's here to tell us about brokerage house. Bank of America has written a note on PSU banks, and they see a 10 to 20% upside in earnings for the coming year. Abhishek joins us with those details. Abhishek?
Well, as you mentioned, BofA has written on PSU banks. They say that consensus estimate for FY25 is still conservative for PSU banks, at least a 10 to 20% scope that they see for EPS upgrades. So valuation upside of 10 to 20% as confidence on consistency delivery with respect to EPS and ROA and foreign ownership actually increasing is sustainable for PSU banks is what they say. So they prefer Union Bank of India, Canara Bank Bank as well as Bank of India better risk reward in smaller PSUs on higher growth trajectory that they see going ahead, plus valuation upside. So the key stock picks why to go beyond SBI and Bob they have written is that EPS expectation for SBI and Bob are already quite optimistic, leaving much lower room for positive surprises. Other PSU banks are still 1 to 2 years behind in their EPS recovery cycle, and that would position them to drive positive surprises in FY25 as well as FY26. So foreign ownership in other PSU banks are still half of what they are in SBI or Bank of Baroda as well. So they see this room to narrow going ahead. In terms of their recommendation, Canara Bank is a buy, Union Bank is a buy, Bank of India is a buy, SBI and Bob they are neutral, while for Punjab National Bank they have an underperformance rating. Back to you.
All right, Abhishek, thanks a lot for that. Let's speak about the energy stocks. We have gas stocks in focus on the back of multiple brokerage reports. GAIL is in focus. Jefferies written on them. MGL, IGL, all of them in focus on the back of a Prabhudas Leeladhar note as well. Sonal joins in with the details of that one. Sonal.
Well, yes, let me start with the note on GAIL by Jefferies, because PNGRB, they have gone ahead and they've issued unchanged tariffs for pipelines for GAILs with effect from 1st April. This goes on till May. The reason that they have not changed the tariffs right now, because there are the other pipelines which will come into force, which will commence as well. So they will issue a revised notification in June with respect to all the pipelines for GAIL, and that's when we could see a change in tariff as well. The current tariff regime, according to Jefferies, is already factored in the stock price, and they maintain their underperform with target price of 150 rupees a share, but the tariff going ahead will be the key trigger for the stock. Now let's talk about MGL and IGL, because there's an interesting note by Prabhudas Leeladhar where they say that electric vehicles pose a big challenge for CNG growth in terms of volumes. CNG sales account for 73 to 75% of total volumes for both MGL and IGL, but sustainability of CNG volume growth from here on has been a concern due to rising adoption of EVs, and that's why they have downgraded IGL to a reduce from hold. They've also downgraded MGL to a sell from a reduce, and the target price as well. China's total gas consumption has grown, aided by residential and industrial commercial demand. They're comparing it with China, where the growth for gas sector is coming from industrial segment, not from CNG or retail segment, and that is something they expect could happen with IGL and MGL as well, because in Delhi and Mumbai or Maharashtra, there's a change in policy as well when it comes to EVs, and that's why they are bearish on the space, and they have downgraded both these names.
All right, Sonal, thanks a lot for that. Time for some important breaking news, which is, being brought by our colleague here, Hormaz. Before that, there's M&M's monthly sales data, which is out. We'll just try and get some more details on that. But Hormaz, you have some important source-based information for us. What is that?
No, so the story is about Ambuja. That was not the fast one I was anticipating.
You want to tell us about the economic data that came over? Please go ahead.
Please go ahead.
No, but the economic data that Citi has put out on Ambuja is the buy rating that they have on the stock with a price target of 675. The story is about Ambuja. The promoters converted their warrants into equity last week, and what Citi is saying is that the warrant conversion is inspiring confidence because the promoter shareholding will go up in the company, and Ambuja's balance sheet is also resilient, and they are expecting free cash flow of around 6,500 crore to around 7,000 crores pre-capex for Ambuja. So a positive note coming in there. A not so positive note is coming in on MCX, but the stock is up and about in today's session, and that is coming from Morgan Stanley, where they are maintaining their underweight rating and a price target of 2085, which is implying a potential downside of around 40% from last Thursday's close. And they are saying that the average daily traded value is a key driver of MCX's profit and share price, and that average daily traded value went up by around 10% in the month of March. But the valuations of MCX at 46 times FY25 estimated EPS is stretched despite the stock's underperformance. So an underweight rating there from MCX, but the stock is up 6% in today's session.
All right, Ramas, thanks a lot for that. Lucky to have pulled a fast one on you on All Fools Day, but let's speak about some more stocks on our radar. We have Torrent Power and Hindustan Aeronautics on our radar on the back of some order wins coming in. Upasna, tell us more.
First, let me start with HAL. Well, the company has signed a contract worth 1,173 crores with Cochin Shipyard, and the contract is mainly for the supply of sets of gas turbines and GG auxiliaries for Indian Navy's project. Next up is Torrent Power. Even this stock remains in focus as the company has received LOA from one of its distribution unit for setting up 150 megawatt grid-connected wind-solar hybrid project under the Green Shoe option, where the cost of this project is estimated at 1,825 crores and the contract period is almost 25 years from the commissioning of the project. Well, it is important to note that LOA has been issued by only one of the units of the company. Hence, even this stock will remain in focus today.
Okay, all right, Upasana, thanks a lot for that. Well, on that note, though, we have completely run out of time on this edition of Chartbusters. You stay with us. Trading Hour comes up next.